Has the bottom been confirmed? According to this chart, it actually has been. We're going to go ahead and take a look at a macro chart today discussing the bottom, as well as a short-term price action, FOMC, and much more. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're having a fantastic day. Bitcoin has come down about 5% over the last 24 hours, actually rejecting from that level we're discussing in yesterday's video, which was this upper resistance, potential diagonal resistance on the chart at around 23,500. We've seen about a 5% drawdown where Bitcoin has come down and retested the lower end of the resistance range we are currently sitting in. We're going to discuss the macro today, take a look at a few new charts, including a particular chart which actually indicates the bottom has already been in. We're also going to take a look at short term and FOMC and the broader markets. Before we get into it, smash the like button, hit the comment button, subscribe to the channel if you are new guys. We do daily technical analysis videos of Bitcoin. We focus on the data, we focus on the stats, we focus on the technicals alone. No emotions, no fake news. Everything here is objective and realistic. We also do have a Telegram channel. The second link down below, guys. You get access to all of our updates, news events, information, and more. Highly recommend joining that up, as we'll be posting the live results from FOMC within 60 seconds of release in this channel, as we always do. We also have our VIP group, guys. You can join our VIP group via the information in here. We do have a sale at the moment. We actually have less than 14 spots remaining on the sale, between 10 to 40% off memberships. You can take a look at our prior results for January here. So massive profits achieved on many coins, such as CHZ, we did 330%, DOT 410%, PYR 500%, some massive profits. Of course, you can find all of our membership details over here. Let's get into the video. So, as always, guys, let's start with the market data. How are we looking for January? This is the last day, all right? We're ending January here. We're ending at 38.14%. Massive. Absolutely massive. Like I said, guys, in the last few hours, we've come down around 5%. So we ended up doing about a 44% rally in January, marking January as one of the most bullish months in Bitcoin's history, and most bullish month in over 24 months for Bitcoin. Absolutely phenomenal stuff. But like we said yesterday, guys, all upward massive rallies at some point are going to see a reversal and rejection. The question is that rejection going to lead to a new low or going to be a healthy correction? And we stand by the fact that we believe this rejection is going to be a healthy correction before a continuation, but we'll get into today's video a bit more. Looking at volume, up 25%. You can see in the top left hand corner, 94 billion. Liquidations are up 139%. Massive, guys, and most of these liquidations, you would guess it, are coming from longs. We saw a lot of longs liquidated, guys, in the last 24 hours. Again, this drop caught a lot of late longs off guard, but thankfully, guys, on this channel, we've been prepared for this for a while now. Been saying this resistance zone is not the zone to be taking late longs. If anything, we are looking for shorts, and thankfully, we have profited for that. Looking at the volatility, guys, we're up to 2.31%, expected to increase as we have seen a little bit more volatility driving the market, and we will expect volatility to increase as FOMC comes closer around the corner. We'll be discussing FOMC in much more detail tomorrow. Moving on to the broader market, so DXY has done it. It's actually broken out that falling wedge. We were talking about this yesterday, of course, the DXY pushing upwards. Breaking out the falling wedge was expected. We do expect a rally to 103 for the next target. Of course, this is going to be bearish for crypto, bearish for stocks. Now, I do want to say it is better that we correct downwards before FOMC, so that when FOMC comes out, we are more likely to see a positive reaction on the news results, and particularly the perceived risk on that news result. But remember, guys, markets don't move on actual systematic risk. They move on perceived systematic risk. Why do you think the markets, Dow Jones, S&P 500, Bitcoin, have been rallying over the last few months? It's because the perceived systematic risk in the market has dropped, because a Fed pivot has been expected, as we have seen each consecutive FOMC data release coming at a lower basis point than a prior, suggesting the trend is downwards. This year on year does not account for the actual inflation rate in the economy right now, which is actually still higher than expected. So looking at the data here, guys, looking at the Dow Jones, we have got rejected from that dollar trend line. We do expect a continuation toward the downside here. If we are unable to clear these local highs, we do need to break through these local highs here to see a continuation upwards. Otherwise, we can expect this drop toward that downside, looking for 33,500, 32,900 and 32,000 as targets. Looking at the S&P 500, guys, we have got rejected from the resistance zone we talked about yesterday. Absolutely crazy stuff over here. Looking incredible for one moment. Breaking above this level will be, of course, very, very bullish, expecting a rally towards the upside, looking for a target around 4,300. Until then, a rejection toward the downside, touching this trend line at about 4,000 is likely, and if we do break into it, we're looking at this upward sloping trend line, 3,950, and again, if we do lose it, we expect a massive correction downwards. A concerning thing I am seeing here, guys, is the 2-year government bond finally retesting the upside of that falling wedge structure. Now, if you've been following the channel, guys, we've been talking about the falling wedge structure here on the 2-year government bonds for quite some time. As I said already, guys, bond yields do signify that the DXY is going to rise. If the bond yields increase, it signifies the strength of the dollar is rising. Generally, as the strength of the dollar rises, we see the DXY increase, and that is, of course, bearish. Generally bearish for the traditional markets, and since Bitcoin is correlated to a degree of 0.7 correlation coefficient, it is generally, of course, bearish for Bitcoin as well. Now, like I said, I don't think we're going to see new lows, and we'll talk about why that is unlikely today, but it's something to keep in mind. So let's go ahead and jump into Bitcoin, and I think what we'll do is we'll go ahead and start with the short term, and then we'll go ahead and talk about the macro and come back to this chart, which is what I'll talk about today in conjunction with that 4-year cycle. This is really the big key point of today's video, but let's go ahead and update you guys with the short-term price action. So what did we see? What did we see? We saw a nice strong rejection, of course, and this rejection has not been, I would say, something we didn't see coming, and I definitely wouldn't say it was unexpected or sporadic. It was definitely something that we've been seeing coming for the last few weeks here. We've been talking about this range for quite some time. In fact, we said we are in a horizontal resistance range here. We breached for upside. We are going to see a small little push upwards. We did expect 25,000 as a max target. We didn't actually reach that. We got rejected earlier. We pushed back into this range, of course, printing a new divergence. At this point in yesterday's video over here, we said we are more likely to push downwards. Our first target being 22,600, which we reached. So if you followed from yesterday's video, if you shorted from yesterday's video, you actually made a nice healthy 5.4%. If you're on leverage, it would have been higher. So again, phenomenal move on the short term for Bitcoin toward the downside. Great to see. We have reached our first target. For the downside targets, we do expect these lower red lines to remain as targets. 21,500, 20,800, 20,100 and 19,500. Worst case scenario, we're pushing back into this range. Very unlikely. As we push lower, as we reach lower and lower targets, the probability that we come down to these targets decrease. Again, high probability, low probability. As we push down, the probability decreases, guys, because when a trend goes deeper and deeper, the likelihood of a reversal becomes greater and greater. There's this unequal balance that occurs as the trend moves. So looking from that perspective, guys, you should be taking profits on the way down. Looking from a 4-hour standpoint, again, we have had a bearish divergence play out. We had this bearish divergence for quite some time now, signifying this uptrend was weakening. We had a weakening in the trend. Not only did we have a weakening in the trend, guys, we had obviously early signs of this trend starting to reverse. We had breakdowns and small wicks below the particularly the Gaussian channel, as well as our market cipher smaller time frame moving averages, breaking these wicks below over here. Looking at us breaking below our smaller moving averages, signifying again weakness in the trend. We finally broke that 4-hour below the 50 EMA, again a potential rejection point for Bitcoin right now for a continuation toward the downside, which is definitely a lot more likely. For the upside, guys, exactly the same thing still remains. The max target this move can take us, I believe, will be that $25,000 local high. We do, however, now need to clear through this diagonal as well as this horizontal resistance range. Nothing continues unless we break through this level. Then we are very likely to continue through that low volume range. You can see over here, a very low volume range to 28,000 to potentially 30,000. a very key level we'll talk about in a second. But again, guys, you can see on the VRPV, we are hanging on by just a third. We're actually pushing through this larger chunk of volume here. We are starting to decrease. If we lose this 22,600 level, which we just temporarily found support at, we can see a nice strong drop down to about 21,500, which actually is exactly where our next target is on the chart over here. We have a volume gap over here on the VRPV, signifying a nice easy range to push through if we do lose this current support we have just retested. Until then, guys, we have actually broken down from our diagonal. It looks like we are potentially retesting this as a resistance, more confirmation that we could potentially be continuing down on the smaller time frame. Let's go ahead and bring up a few more technical indicators, and then we'll dive into our macro chart. So smaller time frame, let's go ahead and bring back that Gaussian channel. Looking at the Gaussian channel, guys, we do have a potential indication here of a glimmer of hope. This, of course, is a retest and potential bounce on the midline of the Gaussian channel. The Gaussian channel is made up of slower moving averages, so therefore it does hold this uptrend longer. According to the Gaussian channel, we are technically still in an uptrend, okay? This uptrend is still remaining. And I do want to really reiterate that point. Technically, we are still in an uptrend. This uptrend here has not flipped toward the downside yet. This uptrend has simply rejected from a high and created a new, or retested a lower support. This uptrend still remains, okay? The indicators such as RSI suggesting decreasing in momentum resulted in a continuation of this level to this level, okay? Our moving averages, such as our 50 EMA, such as our 32, our 5, our 7, our 21, our 28 on our market cipher, signifying weakening in the trend, but does not signify a trend flip. Looking for a breakdown of the Gaussian channel will turn this uptrend into a downtrend, and that is when we really expect this continuation to continue downwards to these lower levels. Until then, we do still have that potential to move upwards here, although with a weakening trend, with loss of moving averages, it is more unlikely that we push upwards here than it is we do continue towards these lower targets. Okay, guys, keep that in mind. Let's go ahead and jump into the larger time frame. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. I want you to remember, first and foremost, the 4-year cycle. And I want you to remember that point of which we discussed, which was that 28 to 30,000 level on the chart. Why is it so significant? So let's dive in. The 28 to 30,000 level on the chart. We'll go back to it actually real quickly. This red zone here. This level is very significant on the chart, as it is going to be the key yearly bull market support, now resistance, which is going to act as the trigger point for a potential bull market facilitation or development in future months, okay? What does that mean? It means if we do break above this level, we are able to facilitate and develop a new bull market above there. Going back to the chart over here, guys, remember, this move out of this falling wedge structure, this is a reversal. This is a reversal. This entire move is a large reversal. It is a large reversal. We saw a 46% rally. Of course we saw a 46% rally. Look how wide this falling wedge was. Look how long we consolidated for. Look how much compression we had. Of course we're going to see an explosive move, guys. It's only natural. Look where that next resistance range was. We saw that play out perfectly. absolutely perfectly. We saw that play out. We predicted that. We called that. We got it perfectly. We actually hit that target of 22,600 on our way up from our breakout point perfectly. Now, this is still a reversal. The macro uptrend has not started, but the bottom is very likely in. Just because the bottom is in, it doesn't mean the macro reversal started. Just because the macro reversal has started, it doesn't mean the bull market has started. Just because the reversal has begun, it doesn't mean we're in a bull market. Make sure you're aware. The reversal has started. This is a completion of a reversal. For a reversal to continue into our uptrend, we need to break above this $24,000 level. This is when our uptrend starts. Our uptrend will initiate over 24,000 and it will develop into a bull market above 30,000. Let's take a look at the 4-year cycle to prove that. Looking at the 4-year cycle, we generally create a bottom once we enter this gray zone. I'll go ahead and indicate it by this small red line. Okay? When do we create a macro uptrend? We generally create a macro uptrend when the price action reclaims on the monthly chart the previous yearly low. You can see the previous yearly support over here. In this instance, it's sitting at 29,800, so about 30,000. Breaking above that level, guys, will in fact confirm a macro uptrend has initiated. When does the bull market start? Well, the bull market starts upon the break on the monthly chart, guys. The monthly chart of the baseline, which is this red line on Ichimoku cloud, which generally happens when we enter this green phase. That can happen anytime between now, okay, unlikely to happen now, anytime between now and April 2024. Keep that in mind. So, is the bottom in? The big question of the day. Is the bottom in, and what charts can we use to confirm that? So besides from the 4-year cycle suggesting the bottom is in, we do have some more anecdotal we have some more technical evidence to actually support that. And I want to go ahead and bring you to the 2-week chart. And we're going ahead and put the screen on the black color setting so it's easier to see for this instance because the lines are quite intricate and small. We can see a structure here which is called obviously our Ichimoku cloud. This is our technical indicator Ichimoku cloud. You can go ahead and put the settings on for yourself. I've gone ahead and turned everything off except for the baseline, okay, and plotted backgrounds. You can see that every time the baseline crosses from the upside, okay, the upside to the downside of the clouds, that is when we print the bottom. You can see it's represented by this blue line. We had the bottom print over here, we had the bottom print over here, and we had the bottom print over here. So according to the Ichimoku cloud, we are technically bottomed out. According to this data, according to this technical indicator, the bottom is in. When will the bull market start? Again, guys, according to this chart, the bull market starts when we break through the Ichimoku cloud to the upside, the baseline crosses the clouds once more. The bull market kicks off. Okay, guys, keep it simple, keep it smart. Do not overcomplicate it. You really don't need to overcomplicate your analysis. One thing a lot of people fail to understand is many indicators, guys, tell you the same story. Many indicators tell you the same story if you understand how to use them. I'm going to show you a perfect example. Let's take a look at the market cipher A and let's take a look at the RSI. Both these indicators suggest slightly different things, right? The RSI suggests velocity, momentum, and speed of price action. The moving averages suggest this general strength of the trend. Now, if momentum, velocity, and speed is decreasing and the price is rising, what do you think the moving averages are going to look like? They're going to be showing glimmers of weakness. Hence why we see drops below these smaller moving averages in the trend. Generally, when the price is above all of our small moving averages here, we have significant strength. Significant strength. Significant strength, okay? When we start pushing below, like here, we have glimmers of weakness. We have weakening in the trend. This picks up. We can go ahead and infer what the RSI will be looking like over here just by looking at the moving averages. Without even looking at the RSI, I could tell you right now we'd be experiencing a bearish divergence as we have an uptrend and the uptrend is weakening. Not only are we weakening in the strength of a trend, but that will be a decrease in momentum. The reason I know it's a decrease in momentum as the trend does weaken in strength, it signifies a decrease in volatility and a decrease in volume. What drives momentum? Volatility and volume. So when you're doing analysis, guys, really try understand the indicators you're using. Understand what they mean. Understand when to use them. Understand how they connect to other indicators. And most importantly, understand when not to apply significance to them. If you understand that, you won't need to use a million different indicators in your analysis. You won't need to overcomplicate yourself. Keep it simple. You really don't need to use complex and ridiculous analytical tools and indicators. When you're using analysis, when you're doing analysis, focus on structures. The levels of points of which price reverses is not going to be told you on indicators. Reversals and structural continuations are defined by structural analysis, okay? Technical indicators define the strength of a trend and the probability certain moves play out. When you're watching people do analysis on YouTube and they're using a variety of indicators, there's complex indicators you've got to pay for and all this kind of stuff, just know that is unnecessary and they're purely doing that to either take money from you or, of course, because they don't truly understand the limitations of the indicators they are using, okay? Master of few is always going to be better than a jack of all trades. Master a few indicators, know how those few indicators work, and apply those indicators in your strategies over a long period of time. You should have success. I'm gonna leave the video, guys. If you do have any questions, leave them down below. I hope you enjoyed today's video. Again, tomorrow we'll talk all about FOMC. And again, if you're interested in the VIP, go ahead and join below. If you're wanting to support the channel, sign up to Bitget and trade on Bitget. We'll have a new Bitget ad out in a few days. I think the current one is a little bit overdue to be updated. And of course, you can join our Become a Trader course if you're interested in learning how to trade like me. Maybe you're not a trader. Maybe you just care about long-term analysis. Maybe you just care about learning about how to trade. Maybe you're interested. This is the place to be, guys. We do everything from market patterns, structures, technical indicators, candlesticks, market psychology, trade setups, risk management. This is the course to be. It will teach you everything you need to know. Go ahead and contact us over here, guys, for more information, and I'll see you tomorrow. Cheers.